Welcome back to the second part of our eInvoicing Express series, Simplifying VAT Challenges. In the first part, we explored the importance of compliant tax invoices and the critical considerations when dealing with exports, milestone-based tax invoices, retention, intercompany transactions, and transactions with multiple tax rates from an e-invoicing perspective. Now we will continue diving deeper into the next set of common VAT scenarios that can present challenges when it comes to e-invoicing. Non-compliant tax invoices. Non-compliant invoices may have missing fields, incorrect tax calculations, mismatch in master details or format, and duplicate invoice numbers. Such invoices risk being unclaimable, may attract penalties, and lead to disrupted cash flows. To avoid these risks, businesses need to review and maintain accurate master data such as supplier, customer, and product details. Set up processes to verify mandatory fields in tax invoices, and use e-invoicing software with built-in checks. Buyer-issued tax invoices. Buyer-issued tax invoices are those where a recipient agrees to raise a tax invoice on behalf of a registrant supplier. In such cases, the e-invoicing implication is the same as that of a seller-issued tax invoice, and so businesses should establish clear contractual agreements, verify if such tax invoices are flagged by your e-invoicing system, and consider maintaining documentation. Tax credit notes. A tax credit note is a document which is generally issued to carry out any amendments to original tax invoices. Issuing tax credit notes for rectifying tax invoices comes with a number of process and governance challenges. In an e-invoicing context, this becomes more acute because where previously a tax invoice could be canceled and another raised, businesses must now issue a tax credit note to amend the original tax invoice, followed by the raising of a new invoice if needed. The challenges businesses typically face include matching tax credit notes with original tax invoices and post-sale discounts. Businesses should reconcile VAT compliance and e-invoice reporting by linking tax credit notes to original invoices. Set clear agreements on pricing, discounts, and terms before issuing tax invoices. And perform pre-validation with customers to confirm tax invoice details. For pre- or post-facto discounts, ensure all adjustments are either reflected in tax invoices or reconciled through tax credit notes in the system. Composite supply. A composite supply consists of two or more goods or services, where one is the principal supply, and the others are ancillary or incidental to it. This is distinct from a multiple supply, where each supply within the transaction is treated as separate and subject to its own VAT treatment, even if delivered as part of a single transaction. For VAT, splitting the type of supply manually runs the risk of misclassifying at either the supply or category level. To avoid this, businesses having composite supplies should document the nature of composite supply in tax invoices and configure the e-invoicing system to allocate VAT rates accurately for each component. Advance payments. VAT on advance payments is applicable when payment is received before the provision of goods or services or issuance of any tax invoices. Tax invoices must be issued at the time of receipt of these advance payments to account for VAT, as the date of supply is triggered. Here, e-invoicing plays a crucial role. E-invoicing introduces stricter controls and transparency, and ensures all advance payments are correctly recorded and VAT obligations are met. However, this also highlights certain challenges that businesses need to navigate. Linking advance payments to corresponding tax invoices, adjusting the tax liability for cancellations or changes through refunds or credits, and issuing the tax invoices upon receipt of advance payments. To ensure compliance, businesses should configure the e-invoicing solution to capture advance payments, automate tax liability adjustments, and track advance payments using custom fields. In addition to the scenarios covered, there are multiple other scenarios such as consignment sales and rounding off adjustments. Businesses need to keep an eye on whether they have dealt with all of their transaction scenarios correctly, from commercial, tax, and reporting perspectives. That wraps up today's edition of the eInvoicing Express series, looking at some of the trickier areas of VAT that have reporting complexities in an e-invoicing context. By implementing the right processes and leveraging the right software solution, businesses can simplify even the most complex VAT scenarios. With VAT and e-invoicing so intertwined, make sure your e-invoicing implementation program involves stakeholders from tax from the outset, and do reach out to us for any support you might need on your journey. Stay tuned for more insights on e-invoicing in the UAE. Special thanks to Signet for their contribution to this project. Thank you for watching.